What's going on, team, and welcome back to another video. So today I want to teach you about the Federal Reserve meetings and explain why it has such an impact on the markets that we trade. So I want to start this video by explaining what the Federal Reserve is. Well, the Fed is a central banking system, and it serves as the banker's bank as well as the government's bank. They also maintain the financial system of the economy, and they do so through conducting monetary policy, supervising regulated banks, controlling inflation, interest rates, and so much more. The Fed is also made up of three entities, which are the Board of Governors, 12 Federal Reserve Banks, and the FOMC, which is also known as the Federal Open Market Committee. So now that you know that, what exactly is the FOMC? Well, like I mentioned a second ago, FOMC is the short form for the Federal Open Market Committee, and they are the most important policymaker in the Federal Reserve as they monitor and control the entire economic state. The FOMC also consists of 12 members. 7 of them are from the Board of Governors, which I mentioned on the previous slide. You also have the president of the Federal Reserve Bank of New York, and the last 4 members are of the 11 Reserve Bank presidents who serve on a rotating basis. So now that you understand a little bit about the Federal Reserve, what exactly is the FOMC meeting? Well, this is when the FOMC comes together to review economic and financial conditions. They determine the appropriate stance of monetary policy, and they also set targets for short-term interest rates. And because of that, this is why I like to call this a rate decision meeting. So on the day of these meetings, you'll see that the rate decision is released exactly at 2 p.m. Eastern Standard Time, and at 2:30 is when the meeting starts. So this is when Jerome Powell is questioned by the 12 members of the FOMC. They normally ask things regarding inflation, interest rates, employment, and GDP growth. Now I want to talk to you about the importance behind these meetings. We don't normally recommend people trade FOMC days, but if you do, just understand that it brings high liquidity and the markets can be extremely volatile. Of course, this will create a lot of opportunity, but what you have to understand is that you can lose a lot of money as well. Another reason why these meetings are so important is that it helps us gauge consumer sentiment. What I mean by this is that you can understand when there's fear or greed in the markets. Whenever the Federal Reserve makes a surprising decision, expect the markets to react from this. A lot of people will be experiencing greed or fear, which will drive the markets higher or lower. Lastly, the reason why this meeting is so important is that it helps us make informed decisions in the long run. For example, if you know that the Federal Reserve is going to increase interest rates over time, you can start buying early, understanding that things are going to get expensive later on. But with that being said, if you have any further questions on this video, please reach out to us through our questions channel located in the Discord server.